Investing in real estate can be an excellent way to build long-term wealth. Real estate investments have historically outperformed the stock market and offer the potential for steady cash flow, appreciation, and tax benefits.
Hi, I'm John, a financial planner with over 10 years of experience in real estate investing. Today, I'll be guiding you through the fundamentals of investing in real estate.
The first step in investing in real estate is identifying a property that meets your investment objectives. Determine your investment horizon, your target rate of return, and your tolerance for risk.
Once you have identified a property, it's time to crunch the numbers. You need to evaluate the cash flow potential of the property, including rental income, expenses, and financing costs. You also need to consider the potential for appreciation and the tax benefits of owning real estate.
Once you have evaluated the property and determined that it meets your investment objectives, it's time to close the deal. This involves signing the purchase agreement, securing financing, and completing any necessary inspections and due diligence. Once the property is yours, it's time to manage it effectively. This includes finding reliable tenants, maintaining the property, and handling any issues that arise. Over time, your real estate investment can provide you with steady cash flow and the potential for significant appreciation. Investing in real estate can be a powerful tool for building long-term wealth and achieving financial freedom.
I hope this guide has been helpful in understanding the fundamentals of real estate investing. Remember, it's important to do your due diligence, manage your investment effectively, and stay committed to your long-term goals. Happy investing!